This morning, Ssms back to palm oil again. So they returned to growth. Sales up 9% in the first quarter after all this negative growth, same like the rest of the sector. That says the palm oil price is coming back up. We don't have full data for the production, we don't have the first quarter yet, but if we look at what's happened year on year, the production last year was down, but this is still a high yielding company. The yield is about 22 tons per hectare, so it's a pretty good plantation. The cash flow is still pretty minus, 7 quarters of negative, similar with the rest of the sector also. The investment spending has stayed quite high, but if we go back to the plantations and we look at what's needing investment, then it's come down significantly. So the investment spending should be less in the next 12 months, and that gives us a positive, a return to positive cash flow. For the sales, we're looking at 10% growth for the next 12 months as some of their new area comes on into maturity, the last of the immature. So in the balance sheet, we're missing 1 quarter's data, but the net debt jumped from 3.9 to almost 5 trillion in the first quarter. But remember, this is because of the FX, so that's going to come back down again. Even without, so we're not assuming any FX, but the debt would come down to just below 4.4. So it's going to come down more than that because the rupiah has recovered. Similar story in the net profit, so a big loss in the first quarter. That's because of the FX, so add that back and they would be in profit. And if we adjust that out, you can see this, the margin has really come back very fast here into the first quarter, almost completely recovered. Now we're being quite conservative, so we're using something in between, and but we get a big jump back to profit in the next 12 months. So in terms of valuation, this is the free cash flow, assuming the margin recovery and much lower investment spending. With our 1.6%, we give it a pretty big discount, but this company is pretty good. It's high yielding. Palm oil, of course, we expect the price to rise. Margins coming back, cash flow returning. Debt should drop significantly because of the FX. But anyway, we still stick with the 50% discount, and that gives us a target price of a much higher target price of about 1,890. And you can see that's the previous target we had, so we've increased the target price significantly since the last time we wrote.